Kunene, who is the MD of the Banking Association of South Africa. Good evening, Bongiwe, and thank you for your time. Does this mean banks are now ready to unfreeze the credit line to companies that desperately need it at this time?
Thank you. Yes, the banks, the participating banks are now ready. We've got 6 banks that have signed with the Reserve Bank onto the loan guarantee scheme. Those are ABSA, Nedbank, FNB, Standard Bank, Mercantile, and Investec.
Now, there's been calls that these loans should not be used for paying bonuses, for paying out dividends, and for taking care of past credit. And this is seemingly creating some kind of tension. What's the view of the Banking Association on those conditions being placed on this particular relief?
These are special loans that have been negotiated with the authorities with a view of helping small companies to be able to have working capital and maintain payments for their operational expenses. So paying bonuses and the other exceptions would not fulfill the conditions of this loan. Remember, the ultimate here is to help these companies, firstly, to maintain the jobs that they have and pay their own suppliers. And above that, they should be able to use this money to pay salaries and
all right. There is, of course, concern around the actual repayment of past loans, because most of those businesses would have taken those loans at the time when the interest rates were quite high. Now, with the interest rates being low, they might want to service those loans and probably be able to get maybe loans at a much lower interest rates. And there's belief that that is going to create some unintended consequence where you're trying to help those businesses, but by putting that condition in place, you will be keeping them at a position of disadvantage.
No, the intention is quite simple. By giving them these loans, you are ensuring that they stay afloat. They are able to pay their suppliers, and they are able to keep the business running during this time of difficulty. The loans that they had in the past are separate, and they will be paying for those separately. Remember, this is going to give them a shot in the arm just for 3 months. So if they apply, they will be able to draw down from that loan for 3 months. Then they are not expected to pay for another 3 months. Then on month 7, that's when they start paying, and it's only a 5-year term. So you cannot commingle it with the loans that have existed in the past.
Now, there are those who've been calling for even more stringent structural reforms to be attached to this relief when it's given to these companies, because there's a view of not socializing capital, so to speak. You got private actions. These companies were private companies. They are now going to benefit from state money. Companies are going to stabilize. They're going to reclaim their position. They're going to be big players again. They're going to have huge profits, and those profits are going to go inside their system, and there won't be an obligation on them to take those, for example, and forward the agenda of transformation, take those and bring in more black players in top management position and the like. Should these reforms be put in place as part of the condition of this loan?
No, there are enough conditions on this loan. The way in which it is structured, it covers all the small companies. It doesn't differentiate who owns that company. As long as the company had a relationship with their primary banker, they can go to that primary banker and apply for a loan. and keep the current business going on. Because what is being addressed here is there is a number of companies, small companies, maybe to the tune of about 700,000 of those companies. These companies, in terms of ownership, they cover everybody. And in terms of who they employ, they also employ everybody. So this is a measure to keep jobs in South Africa, the jobs that we have. It's not for starting new companies.
What about then the stringent credit or lending criteria that had been existing even prior to COVID-19? Does that mean in terms of issuing of this loan, those systems will be a little bit relaxed, or will they still be as stringent as banks have been looking at prior to, of course, COVID-19?
Well, banks have got a different credit risk appetite. So they will continue looking at each and every client using the assessment and the criteria that they've always had. What is new here is that once they have determined that this is a company that they are able to fund, keep in mind that it's a company that is already their client, they will be able to then get into the scheme and get this guarantee. They have their skin in the game as well, because they will be pricing in a way where they expect that there could also be losses. So there wouldn't be a relaxation the way that you are putting it, because there is absolutely no intention here to have reckless lending.
And so what you are saying is that there will be shared responsibility. So there will be a balance between what government is giving and, of course, a burden of responsibility on the banks themselves. What would be that responsibility on the side of the banks?
Well, the banks have accepted the condition that they will take a loss of up to 6%. And they've also accepted the condition that these loans will be in a class by themselves, so that on a yearly basis, they are going to be assessed by the Reserve Bank.
And for the enterprises themselves, what is the rate that they will be offered? Is there a standard rate across all the banks that are participating that will be given to the enterprises?
The rate that has been published is 7.75%.